Hello traders, this is Mike Billion. Today is January 8, 2018, and let's talk about the market. Let's start with the spider. The spider, as you can see here, is at this major resistance, which it was resistant back in March 2017, and it was resistant in July 16. So it's right there stretching that resistance after it break out all the Fibonacci extensions like butter, and it looks like it's heading to 290. Now, this is not a good moment to enter the spider right here because the DMI is overextended, but it's bullish. It doesn't mean that it's gonna go down. It means that it might go down a little bit right here, or it might trade sideways until the reports coming out starting in January 17 next week. If the reports are good, this thing is gonna move sideways a little bit and continue up. But I will wait for a better entry, a little around the Fibonacci 268 or the 5 simple moving average, which is 271 or 270. That will be a good entry. But right here, I would like to wait a little bit. So now let's talk about the IWM. I also look the IWM because it represents the small caps, and you can see right here it has a better setup than the spider because it's moving sideways trying to break out the 155. That's the key number, 155. If we break out the 155 and with the low ADX, this thing it can move to 163, 165 in a blink. There's a lot of consolidation here, and I think it's gonna be a major breakout because ADX is low again and the directionals are neutral. So we're just waiting for price to break out key number 155. So now let's talk about another one. Let's talk about DIA. Is that the Dow Jones? Right here also testing the 253 Fibonacci extension, which is the resistance. DMI is bullish and strong, but I like IWM better than this one because this one is making higher highs, but it doesn't give you a setup. You always have to look for a setup so you can trade a breakout or a breakdown. You can trade when it fails. Right here it's just moving up slowly and it's impossible to enter. It's really bullish. Now let's talk about Facebook. Facebook, as you can see here, it moved up slowly and is going to 168.74. It break out the level and it looks like it has to test 190. It has to go there. It's bullish and strong, and it's going to report soon. It's going to report and at the end of the month, January 31st. So that will be the catalyst for this one to break out 190, but just wait before the earnings at 190 to see if the numbers are coming good but I think Facebook is a long-term stock. You should have it in your portfolio. I think this is going to be like 200, 300, like I said before. Now let's talk about another one. Let's talk about the one that a lot of people like, Apple. Nice setup. It's on my watch list. If you break out the 177, that's the key number. You see the resistance here? That's the key number. Bullish, but it's not strong yet. I think if you break out right here, there's gonna get a lot of buyers there, and there's gonna be a nice volume to break out. The earnings reports are coming at the beginning of February 1st. So it might wait right here inside this triangle until the breakout, or it might break out if there's some early news or some leak that the report is gonna be good and start breaking out. It can move at least I'm talking about 12 points, so it will be 185, 186 that it can go. So Apple is bullish and strong. Home Depot looks like the Dow Jones. It's moving like the Dow Jones, making higher highs. Very hard to trade because it doesn't give you the opportunity. I would like to get it at the 50 simple moving average, or at least at the 20 simple moving average, which is 187. Right here, I'm watching, but it's bullish and super strong. Netflix break out the Fibonacci 202, and it looks like it's going to major Fibonacci extension 240. There's not resistance there because there was no past price that you can tell that is resistant. It's just moving up very nicely, with good volume, and DMI is super strong. Netflix is going to report next week. I think it's January 22nd, and I think it's going to go to 240, but we need to see that report. For now, it's bullish and strong. Now let's talk about another one. Let's talk about Tesla. A lot of people trade Tesla, but this one is a weird monster. You have to have a good stomach to trade Tesla, because this thing, when it moves up, it moves nicely, but if you are on the wrong side, when it breaks down, it's painful. Right here, you can see here, it moved sideways for for about 3 years until it went up. That was in December 2016. It moved up very nicely and it tested 382. Again, that was in June 2017. Now, then it retests in September 18. It retests the same level, 382, which is the key level. And now it looks like it's consolidating right here. And I think it's going to move up very nicely. You can see the resistance right here. Let me zoom this out. And I think today it has a huge candle, huge volume. I don't know what happens, but this thing is testing this resistance, and that should be your key enter. If you break out this resistance and confirm the breakout, this thing can move easily to 383, which is the major Fibonacci extension resistance. That will be the first target. And if you break out right there, it can go to 400 or 450, probably middle of the year. But right here, it's consolidating very nicely and it's setting up for a nice trade. So, be ready, but watch the chart when it confirms the breakout. Now let's talk about Twitter. Twitter is back on my watch list. A lot of people are seeing Twitter like there's some volume. There's some major blocks of people buying auctions on Twitter. They expected that this thing is going to go up to 40. That's the water cooler talk. And you can see here, it break out at 22, which is now the support. If it break down below 22, bye-bye. It's going to go to $13 or $15 again. But it looks like it's going to go to 29, which is this resistance right here. It was resistant back in October 2015. So if it goes there, you have to be careful. 29 or 30, there's major resistance there. But now it's bullish and it's really strong. I'm sure people are going to be waiting for the earnings report, which is on February 8th, and people want to see if the company finally is making money or not. For now, it's bullish and strong, so be careful being bearish on Twitter. Ulta, many of you probably went to any Ulta storage to buy something for your wife, for your mother, and you can see here it break out the 240, but the next day it failed to continue. It's now right here holding up, but if you break down below the 20 simple moving average, which is the support 226, that will be in trouble and probably retest the 210. But it looks bearish and strong, and I think it's gonna again break out the 240 and it's gonna fly to 290. I think Ulta is bullish, but you have to be careful and respect the 20 simple moving average if it closes below the 20 simple moving average. Now let's talk about steel, United States Steel X. Right here is testing the 37 Fibonacci resistance. It was resistant back in February 2017 and in December 2016 when it fell down from 37 to $22 in just a couple weeks. And now it looks like it's testing that again. It looks bullish and strong. I will wait until it tests the Fibonacci 31 or the simple moving average 20, which is $35. But it's bullish and strong, and I think it's gonna report at the end of the month. So probably it's gonna stay there and wait for the report. And I believe that it's gonna be good. Because the last report was good, and I think the economy is pick up, so companies need more steel. So I think this one is good. It's a good one because I think it's gonna go to $47. I think $47 is coming, so keep it on your watch list. And for last, the VIX. I talk about the VIX always, and not that I trade it. Long time that I don't trade the VIX, but I have this nice chart. Every time it's in the blue on this blue rectangle, it means there's no fear. When it's right here between 10 or $8, there's no fear. When it spike, then I'm very cautious. But always wait for the setup. Don't enter trades that overextended or keep moving slowly up, because those are the ones that any moment, any news, any fake news can go down and you're in trouble, because we all trade options. If you trade in long term using the stock, then you're not in trouble. You just can't wait. If it goes down a little bit, just wait, because the economy is strong and we can see the charts. There's a lot of volume and it's moving up. So for auction traders, we have to wait for the right setup, because we need time. We have to be perfect in timing, because the time decay. So let's see what happens. For now, the market is bullish, and I think it's gonna continue bullish. But you have to wait for a nice setup. So I give you a couple key numbers. I hope you trade, and I hope you join my billion, because I have a nice offer on my website. It's a lifetime membership. So check it out. Go to join and check it out, the lifetime membership, and you can enjoy my trades. This is everything for today. Trade on.